It's Thursday, February the 27th.
Saturday will be March the 1st. Where has
Pretty soon we'll
January
be saying we're in the first quarter.
We're in the first quarter, then we're halfway through the year in the summertime, and folks are heading to the beach.
Speaking of quarters, we're getting the last quarter of the year's numbers coming in, and they kind of all have the same theme. They're doing well for the quarter, but the outlook for 26 is not as good.
So they're saying they're going to be good, but not as good as they were before, and so the market is reacting to that.
Because the valuations are so high. The
Right.
S&P 500 is at almost an all-time high when it comes to valuations. And we've been saying for months that this market is priced to perfection. So if they don't have a perfect report, guess what happens to the stock price?
Different tidbits have come out this week that are indicating, really what they're indicating is the bumpiness that we're going to have. Let's just carry us into the summer. The Federal Reserve president out of Richmond said he is going to be slow in his mind to want to reduce interest rates. You talked about it last week. The VIX jumped to 16. Well, this week it jumped to 20. The VIX is the volatility index, and it's a measurement of 1 to 100 that shows anxiety in the market.
Anything above 30 is usually panic.
Right.
And so it's crossed into 20, but it has been, I think, artificially low for the better part of the last year. But it did have a jump yesterday and day before.
Cryptocurrency that just took off because of the new president and the new administration, and that what they thought was a positive had a great run up in November and December, but this week it took a nosedive and it lower levels, and it created angst. But all in all, I still see reports. We still see reports that says by the end of the year, the S&P 500 has the opportunity to have a high single-digit return, maybe double digits in a low number. But the market is going to be up this year, is what all indications are.
It's going to be a lot of rinse and repeat. I mean,
Right.
it's going to be 2 steps forward, 2 steps back, and when it all settles, we haven't moved much. But I'm with you. I believe that we'll have positive returns at year's end. I just don't know how positive.
The center of the fairway continues to be somewhere in the 40% equity position to somewhere in the 60%, and then you could be on either side of that based on a risk aversion or really wanting to get after it and try to hit some home runs this year. But when we sit down and we look at our client's portfolio, knowing what your risk is, communicating with you, that's the zone that we will be looking at to see where we are and would react accordingly from that. If you have questions, please give us a call. We're talking to a lot of clients, meeting a lot of clients. We're meeting new people also. So if there are folks you think we ought to be talking to, please introduce us. We will treat them as well as we treat you. But we do this each and every week because we know how important it is to you, and we do it most of all because we know it is your money.
And your money matters. Have a great rest of the week and a good weekend. Talk to you
See
soon.
you in March.